Spotify reported quarterly financial results on November 12th, 2024. That sent the stock price soaring. Of course, I'm happy about that. I've had Spotify stock rated as a buy for a long time now, even though I haven't updated that recommendation in a while. I'm revisiting this company now, given some members that are requesting me to reiterate my following of Spotify stock. So in this video, I'm going to review the company's latest financial results and then update my recommendation of Spotify stock, let you know if I still think the stock is a buy, hold, or a sell at these newer, more elevated valuations. So let's take a look at this interesting streaming company. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so Spotify is saying that their monthly active users ticked up to 14 million net additions, surpassing their guidance by 1 million. So they were forecasting 13 million, and they actually delivered 14 million. Subscriber net additions of 6 million were also ahead by 1 million, so 20% better than expected for the subscriber net additions. If you look overall, total monthly active users increased to 640 million, and that was up by 11% year over year and 2% quarter over quarter. Premium subscribers are 252 million, which were up by 12%, and then ad-supported subscribers are at 402 million, which is up by 11% year over year. So solid growth here from Spotify across the board in all categories, as people see the value in its services, whether it be ad-supported or premium tier. More impressively, the company's operating income jumped to 454 million euros. That was better due to better gross margin and lower personnel-related and marketing costs. They actually decreased their expense line items and still increased their revenue, increased their subscribers, increased the usage from customers. I love to see that. That demonstrates organic demand for your product. When you cut costs and you still increase revenue, you still increase customers, you still increase engagement, that demonstrates that people really like your product. They're not just coming in the last couple of months because of advertising or incentives or promotions that you started up, but they're coming because they like your product. They sought out your product, and they're joining because they want what you have to offer. And so that demonstrates organic demand, and I like to see that from companies. Third quarter free cash flow reached 711 million euros, bringing year-to-date free cash flow generation to 1.4 billion euros, demonstrating how lucrative this business model is. Overall, I'm a fan of this type of industry, streaming content, where you're spending money on content and you're attracting monthly active users. It's part of the reason why I've had Netflix stock rated as one of my top stocks to buy, because this industry model is very lucrative, and the reason for that is it has strong economies of scale built into the foundation of the business, right? Spotify pays roughly the same amount for its content, whether it has 100 million monthly active users or 500 million monthly active users. So the incremental monthly active user count adds to the company's bottom line as the company's expenses are scaled across a greater number of users. And so the cost per user to provide that entertainment goes down as the company scales up. So if it continues reaching these larger levels of scale, then the company can spend more on content, which will then attract more users, which will then allow them to spend more on content. It's a positive, virtuous cycle that I've seen with other successful players like Netflix. And so I like this business model. I've liked it for some time now, and Spotify continues to demonstrate the effectiveness of this business. And if we're thinking about artificial intelligence, there is hardly any industry I can think of that benefits more from artificial intelligence than Spotify would. Listening to music, finding content that you like, given that there's so much content available to watch and to listen to, the recommender systems, and the better they get, the more engagement across the board it will generate. How would you know if some new artist that came out with an album is someone you would like to listen to? It would be hard for an individual to go search out and find that content and surface that content. Whereas if Spotify invests in its AI capabilities, able to recommend you the type of things that you like to listen to, whether it's a podcast, whether it's a song, whether it's an audiobook that they've been offering more lately, it helps engagement if they can surface that. That's something that I've been saying how good YouTube is at that, recommending things that you would like to watch, right? Imagine if YouTube wasn't recommending all of this content for you on your homepage and you had to go search out all the content that you need. There are so many content creators. There's so much content being uploaded on YouTube that it would be so difficult for you to find things that you want to watch. But because its algorithm is so good at surfacing that content, it keeps you engaged. And that's what Spotify can harness here with its investments in the expanded AI playlist, which is now in beta in the United States, Canada, Ireland, and New Zealand. 6 markets in total. I wouldn't be surprised if this is a huge success. They already launched the AI DJ to Spanish-speaking music fans in 18 markets. So I wouldn't be surprised if this is a huge success for Spotify and it increases engagement. And if it increases engagement, that's especially important for its ad-supported tier. The more time those folks spend on the platform, the more advertisements can be delivered to them, and that will increase that tier. And then for the premium members, the more engagement, the more likely they are to stick around and feel like they're getting their money's worth for their monthly subscription. Spotify expects the good results to continue, forecasting an increase of approximately 25 million monthly active users in the next quarter, an increase of approximately 8 million premium subscribers, with total revenue coming in at approximately 4.1 billion euros and operating income of 481 million euros. So great results in the previous quarter, and management is forecasting great results to continue. I'm not surprised that Spotify's stock price is up as much as it is year to date in 2024. It's more than doubled from less than $200 per share, up over $468 per share as of this recording. It's now trading at a forward price to earnings of over 53. It started the year trading at a forward price to earnings just above 2025. And one of the reasons why I really like the stock is because of those growth prospects and the relatively inexpensive valuation. Now that it's trading at a forward PE of 53, the valuation is really catching up to the company's excellent prospects. So to update my recommendation, I'm downgrading Spotify stock by 1 notch. I still think the stock is closer to a buy than a hold. That's what I mean when I have it rated as a borderline buy. It's between a buy and a hold, closer to a buy. And I updated that recommendation today, November 13th. My only hesitation is the valuation at a forward PE of 53. If the valuation comes down to a forward PE in the high to mid 40s, I would upgrade this stock to just a straight out buy again. So that would mean at a stock price of, let's say, around $425 to around $400 per share, I would upgrade. I would think this stock is closer to a buy rather than a hold. Or in other words, if you're just looking at the forward PE valuation, anything in the high 40s and below, I would think the stock is a clear-cut buy. The valuation is getting a little bit rich, but the business is excellent. I love the business model for the reasons I highlighted earlier. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.